Gopal Agrawal also joining us this morning, Head of Macro Strategy and Senior Fund Manager at DSP Investment Managers. Gopal, good morning. We're reeling right now under the impact of the coronavirus on global markets, still relatively insulated considering what we're seeing overseas, but it's fairly uncertain and volatile. Do you feel that this situation is one that requires keen monitoring in the short term? Are you unfazed by the more long-term prospects of growth for the domestic economy?
Yeah, so the current coronavirus issue is definitely a very short-term issue, and what has happened in the market, after the U.S.-China trade deal, we started to play the reflation trade in global economy, and all of a sudden we saw the break on that trade actually. So now we are back to the basics of the domestic economy. So in such a scenario, what we are seeing, the domestic growth impulse is actually not very strong. I would say it's moving somewhere at the mean actually. So that is why the market is in a wait and watch mode. And what we are sensing that the recent measures taken by the government and RBI, especially on the LTRO side, will lead to some kind of positive momentum in the times to come, because the way energy prices are moving, the way bond yields are there, and AA and AAA spreads are actually narrowing. So my sense is that investors should not worry a lot about the short-term movement, but because the most of the many macro parameters are turning really very positive for the market.
Gopal, what should one read into the drop in yield? A bull would say rates will come down, demand will pick up. A bear would say if rates are down, if yields are down, that also means that credit demand is not picking up. So should we look at glass half full or glass half empty?
So Nikunj, that's a very good question. What I would say in the India's context, the demand is not a big issue. Actually, what happened, the interest rate makes a important dent on this. So whatever happens in the context of India, if any interest rate which is on a downward bias will have a positive momentum on growth actually. So we have seen in the past, even if you go back in history in 2003 to even 2000 after 2013. When Subbarao sir has raised the rate and the yield started moving downward, you saw the real growth impetus and mid-cap outperforming the market. So my sense is that the near term, people should look at more positive rather than negative.
How are you investing in this environment where we know that the uncertainty, I guess, could be here for next 6-8 months? Should one stay with classic defensives? Could be FMCG, could be a name like DMart, it could be few private banks. So it's time to start taking risk. Are you buying risk in your portfolio, Gopal?
So Nikunj, very clearly, I don't want to throw the towel and go totally into risk aversion mode, because many of the stocks which are so-called value stock or linked with the the reflationary trade are getting valued at a point which is close to book value or below. So I want to run a blend of 70% growth and 30% value in the portfolio. Similarly, also, you should also consider that now people will also look at, the kind of different sourcing model from China actually. So India can be a good market where people would like to have, alternative source, maybe for capital good, maybe for chemical, maybe for bulk drug in the times to come. So I think this sector, specialty chemical and even the capital good and even the API manufacturers are likely to benefit from these changes.
Okay. Couple of themes perhaps that you're looking at, Gopal. Let's talk about divestment actually, because I noticed a recent buy on BPCL. Are you closely tracking that agenda? What are the kind of timelines you're anticipating, the kind of appetite for a blue chip like BPCL?
No, very clearly what we are seeing, the world is going through a downturn in demand basically of the crude oil. So any upstream guy would like to have a market like India where, the demand for petrol fuel is rising between 3 to 6%, over a period of time. So definitely a lot of players would like to enter into Indian, oil and gas marketing space to get the benefit of this. So my sense is that, the currently marketing is the best vertical in entire value chain of oil and gas.
Focus on the OMC.
So, I think there will be a lot of
yeah. Go ahead.
So what I wanted to share, so a lot of foreign guys will certainly look to come to India because for marketing side, and you can see even very recently, US company wants to set up, some kind of gas marketing network, also wants to enter into distribution of gas, wants to do the retailing of petrol fuel. So net, I expect good interest into the oil and gas sector in India. Only thing is that we want to give them much more clarity, if there is a spike in oil prices, the government policy should remain immune to any kind of changes. So if we provide literally some kind of assurance, then you may see real upside to the valuation.
And what about Telecom? Let's talk about that as well. Again, I mean, we're of course seeing, the anxiety play out in the sector with regards to the AGR issue and the financial strain. Yes, there have been a resounding number of buy calls on Bharti, but given the recent news flow, are you still confident? What's the kind of rationale behind, your preference of Bharti in that space?
Yeah, so currently I am running significant overweight on Bharti in the portfolio, and I am quite positive on this space because what has happened today, the debt on the sector pre-AGR reached to over 7 lakh crores with a revenue of only 2 lakh crores. So you can assume kind of stress in the sector because of competition led to significant reduction in ARPU over a period of time. And now what we are seeing, even the core business of the competition is also getting under pressure. So, and because of this AGR ruling, certainly the industry will come to a stress level where ARPU has started to move up. And the last quarterly result was the first point we have seen there is an uptick in ARPU. And if that trend continue, I still believe there is a lot of positives upside in the sector because only deleveraging of the balance sheet can lead to market cap creation.
Would you be revisiting PSUs now? They have strong dividend yield. The corporate tax cut benefits would kick in. We both know the benefits of these. But however, what we both know, markets also know. If markets know something, how come nobody is reacting to it? Post corporate tax cut, with the exception of let's say an SBI or an IRTC, all PSU stocks have only fallen down.
So, Nikunj, very clearly what happened, this, value stock so-called outperforms in a growth scenario. And what we are in actually, especially the global scenario, the manufacturing growth is actually not picking up. Even US is clocking 2.3% GDP growth rate, but manufacturing growth is 10-year low actually. So, this is the scenario globally. So, what happened, there is a very few buyers for the so-called value stock in a scenario where growth is not there. Even in the case of India, we have seen barring the last 45 days, the power demand for the last before that the consecutive 5-6 months we have seen negative downtick actually. So the point here is in a scenario where people have turned little risk averse because of continuous supply of paper number from the government, and also not very sure about the growth scenario. So what happened, people try to remain underweight on this kind of value stock. So my sense is that value will certainly outperform in a growth scenario. If we start seeing the uptick in the global growth or the local growth, you will see certainly these stocks which are trading at single digit P multiple, below price to book valuation and very high dividend yield will certainly come back. So I would really say that the blend approach is required rather than going too much overboard or going or remaining totally zero on this will be a wrong approach. The middle path will maybe the right approach at this juncture.
Talking about when it comes to the PSU trades, what about infrastructure and the capital goods sector? How are you looking at the kind of commentary that we've seen from the managements, the kind of government initiative? Is this a space that you will be upbeat on or a bit cautious?
What we have seen, like the infrastructure sector is in a mess because of the government fiscal, both central government and state government budget is getting out of control. So definitely there is a lack of the money supply to the contractor, and this sector is in a trouble. My sense is that till we get an uptick in the tax collection, this sector is likely to underperform actually. And after 2008, FY08 particularly, we are seeing a real issue on the tax collection in India. So that is why this sector is in a perennial underperforming. So as soon as you will see some uptick, maybe some positive nuances coming on to GST side, that will be a very positive trigger. The only point here is now infrastructure sector stocks are trading between 5 to 12 P multiple. So definitely it has corrected by more than half from their high at the peak point of time valuation.
2938 for Bajaj Auto, that's another factor, that's another space which needs some attention. Gopal, auto is one space where the street clearly is divided on whether demand the slowdown is structural or cyclical. Now, I personally refuse to believe that electric vehicles will take over and Indians will stop buying cars. But the way stocks are getting punished, nobody is ready to give the true value of franchise to some of these companies. These are zero debt companies. They generate a lot of cash. They have brand which cannot be replicated. Yet markets are just punishing these stocks down. I mean, a Bajaj Auto is trading at a P multiple of sub 15. Maruti is trading at a P multiple of 19, 20. What is going on here?
Nikunj, certainly this sector is now coming to a real value zone, I would say, because now they are offering you a good free cash flow yield of over 5%, between 5 to 9% certainly. What has happened very clearly is still, you are not seeing the uptick in the auto demand, because December was minus 1.5% negative, January was minus 6.5% negative on the passenger vehicle sales. So still the uptick is actually not coming. So and there is a hope, still street is hoping on the commercial vehicle side government may come out with a favorable policy. So on that also we are not yet listening very positive vibes, but certainly if there is something that will really will be a very positive. Only the point I would like to say that currently valuation and also operating parameters are in favor of auto industry. There can be short-term volatility because of the like auto component supply issue, but as I said earlier, the RBI LTRO lowering the cost of funding and availability of money supply in the market will and also improvement in Rabi crop. Certainly I expect things to bottom and rebound in the times to come.
To Indian retail stocks, DMart, Trent, I mean, retail is one sector which is globally getting crushed. The Abercrombie's, Fitch of the world are getting shut down. They are filing for bankruptcy. But in India, DMart and Trent is trading at P multiple, which just tells you that, look, this is the next sunrise sector. Do you own retail stocks? Do you regret not buying it? What is going on?
Nikunj, luckily I own retail stock, and that has helped me to generate some alpha in the portfolio. As what you are saying, like world is moving towards the virtual market. So certainly, in India also, like this journey may be like 10 years down the line. So by the time, the Indian just always like to have a feel, right, touch and feel. So in Indian retail, modern trade is actually just expanding. So so my sense is that as premiumization, urbanization is a trend, so still there is some room for retail companies to generate positive growth. Nikunj, please understand what is happening. We are still in a memory of very high GDP growth, very high earning growth, but that is not there actually. So whichever company are reporting growth, we are giving very high multiple. So as you said about PSU trade, believe me, if you look at dispassionately, they are not showing you positive earning momentum. So if you get positive earning momentum, market will really reward. If you look at the sector like chemical sector, whether it is you have seen in recent term even in cement sector, whether it is in a gas marketing sector, wherever there is a earning growth is positive, you are seeing big re-rating. So what the point here is, the liquidity is large. Even if you look at global guys, for them their cost of fund is sub 2%, right? In India, if you look at our current account situation is so great, rupee is well behaved, right? And Indian many stocks, many businesses, retail sector offers you a very good yields actually. So that is why, if you have noticed, the commercial real estate sector in India is the best performing nifty sector actually. So the point here is, gone are the days of very high earning growth. Wherever there is a earning growth, you will see that stock will trade at a very high multiple. So we should not as I said, till there is a growth revival, there is a growth revival, widespread earning momentum coming in, you will see this kind of shallowness, and there can be skewedness in the market.
Always give me these differentiated thoughts, which always I look forward to hearing. So I look forward to seeing much more of you going forward on the channel, and good luck with all the good work you're doing.
Thank you very much.